Welcome back, everybody. I am Laura Bladow with Remax Excel here in central Wisconsin, filming episode 2 of the new construction series. And today, our topic is how to finance new construction. And I have welcomed Amber Gober with People State Bank, who is also here in the Wausau area. Welcome, Amber. How are you today?
Good, Laura. Thanks for having me.
You're so welcome. So I've invited you here today because you're very active in the Wausau Area Builders Association. Clearly, you do plenty of construction loans, and you're one of my go-to experts in the lending industry to help answer questions and really help customers understand what they are getting themselves into with whether it's buying a home or new construction. So why don't you tell everybody a little bit about yourself, your history with People State Bank, and then we can jump into construction loans. How's that sound?
Perfect. Sounds good. Well, I've been with People State Bank for almost 5 years, but I've been doing lending for about 11 years, total years in banking over 20 years. So won't give up my age on that one. So.
Glad that middle school workers were able to be.
That's right.
So let's talk a bit about construction loans. They are definitely very much a very different animal from a regular old mortgage, are they not?
Absolutely. Completely different than a conventional mortgage when you're purchasing a home.
What is the biggest difference?
Yeah. So with a construction loan, there's two different phases. So we start with the construction loan, where it's basically like a line of credit that the builder can use to be able to do their draws and get the home completed. Then when they're all said and done, what we do at People's is then we do an end loan where you have your final loan payments, which is, your principal and interest payments.
Okay, so I'm hearing you say it's a two-step process.
Yeah, at least with our institution. Each institution is going to have their own loan products that they offer. So some will be different where they offer a single close, and others will have it where it's a two-step process.
Okay, so let's pretend I'm thinking about building a home. What comes first, the chicken or the egg? Do I go to my contractor and finalize plans first and then come to you, or do I come to you and determine how much I can afford for my builder to build my home?
Yeah, either way, it's probably down the line 50-50 for what we see. Some people will want to come into us to be able to see what payments would look like based on a certain dollar amount or what they're pre-approved for, and then go to their builder after that. Or others will start with their builder and come up with their plans and their contract to see how much their dream home is going to be worth. And sometimes it's a reality check of, whoa, this is way more than I expected to be able to have for a cost of a construction first purchasing. And then others, like knowing that, okay, this is my firm number that I'm working with and what are my exact payments going to be look like. So no wrong answer. You can do either way.
Okay, so I know I get this question a lot, and we have a lot of tradespeople in our area who are very handy and would like to work on, bits and pieces of their home to save themselves some money as they're building. And a lot of the general contractors in our area for custom builds are open to that, but they also kind of really strongly encourage making sure that there's one specific general contractor who knows what they're doing and can really manage the process to keep timelines and budgets in check. Is there a requirement from the loan standpoint that there be a general contractor who's licensed, or any special rules surrounding how that works?
Yeah, we do require that you have a general contractor just so that they can kind of have a whole overview of the project and work with the subcontractors. Now, if there's somebody that, is an expertise in electrical and they want to do their own work for that, we'll still need to make sure that there is a bid or an estimate in the contract for that, just in case something were to happen where if they weren't able to complete that work, that we still know what the cost would be if somebody else were to be able to do it.
And I know we've talked about this before, but there's a very good reason for that. So, although it sounds a little bit dark, the reasoning behind that is that if something happens to somebody in the process, like an accident, you can't finish the job, that it still gets finished, right?
Yeah, yep, absolutely. You need to be able to have that backup there so that if something were to happen to the person that was supposed to be doing it, that somebody else can come in and keep the project, still on track within that same budget that you were initially looking for. And if you're able to do part of it yourself because you are a licensed electrician or a plumber, then it's just going to save you cost in the long run. But at least when we're looking at the overview picture, we're looking at kind of worst case scenario of this is what my numbers are going to look like, and then keeping the project on track.
That's a good point too, in that we in the industry know that rarely do you come in on or under budget. How do people handle, especially in this last year when materials took a giant hike, costs and people going over budget? How do people handle that?
Yeah, we usually look to make sure that somebody has some type of reserves, whether that's liquid assets right away, or they have access to funds if needed, in case there is any overages or there is a change in plans where, something ends up costing more than expected. And that way they're not trying to fumble at the end of where's this money coming from, so that they do have those funds set aside.
Good plan. Makes me feel a lot better. So you mentioned draws, and I'm just, if people have not been in part of this industry or have never built a home before, I don't know that people really understand what a draw is. Can we define that a little bit?
Yeah, you bet. I'll kind of start from the beginning of how the construction loan works with having to obtain their contract and the blueprints and the estimates. We have an appraisal done then based on what the home is going to be worth when everything is all said and done. And that's how we determine what we can do for our loan amount. As the builder then is working on the project, they will request draws directly from the title company. So basically your construction loan is like a line of credit using your home that you're building as your collateral. And anytime that the builder needs funds, they have a draw request form completed that is completed and says, this is the funds that I'm requesting, this is what it's for. And then we have both the builder and the borrower signing off on it. And they submit that along with any receipts or invoices directly to the title company. The title company at that point does their site inspections, where they are going to make sure that the work is being completed and kind of look at the budget for what was proposed on the contract and make sure everything's lined up with that, as well as collecting the lien waivers. And then they'll submit that over to the bank. We'll approve the funds to be dispersed, and then the builder and the subcontractors get their money.
Okay, what kind of timeline does that fit into?
Yeah, usually only takes a couple days once the title company gets their draw request. So it's a pretty quick process.
Yeah, okay. Well, that makes sense.
Yeah, and then there's usually several draws throughout the construction phase.
Okay. Is there a maximum number of draws, or is there a minimum number of draws?
Each title company is different with that.
Okay. So we know that the building process takes quite a bit of time in some cases. It can take, up to a year or over a year. In some cases, not always, but is there any kind of timeline that, like the loan application for a regular mortgage expires after 90 days, the pre-approval, I should say, expires after 90 days. Is there something similar in the construction loan end of things too?
Not in terms of the construction loan timeline, but what we do have to look at is the appraisal. When we have an appraisal done for a construction loan, in order for us to be able to use that same appraisal with an update, we need to make sure that it's within 12 months from the appraisal date to the closing on your end loan. So if it ends up being that it's over that 12-month period of time, then a new appraisal would be needed.
Okay, that's good to know. And I think that a lot of folks don't understand that they are paying for those appraisals, and they can run anywhere from like $600 to $1,000 depending on the area and who's doing it and how much availability there is in the area. I know from the residential existing home side of things, we've run into a lot of issues with appraisals coming in a bit low because of the lack of inventory on the resale end of things. Can you talk to me a little bit about trends in our area over the past year or so? Has there been any concerns as far as that end of things that people need to be kind of thinking about as they go into the building process?
Yeah, it definitely comes into play. What we see is it's really based on comps. So if you have an area that you're building in where you have a lot of similar newer homes, then more likely you're going to be able to get those higher values on the appraisal typically, because the appraisers have the comps that they can use for that. When you're having something more unique, or if it's in an area that doesn't have necessarily a lot of newer homes, it's going to be a little bit harder for those appraisers to be able to find the comps to be able to get the value that they need. Um, and that's what it comes down to. And sometimes, you look at it and, it's not dollar for dollar for what the contract amount is compared to what the appraisal is. So you have to, plan for those adjustments that are there. And again, have those reserves if need be.
And that may be a scenario where they have to reevaluate some of their materials going forward type of thing, or is that at the very end?
No, they would want to do that ahead of time so that we make sure that our appraisal matches up directly with the contract.
I see. Okay.
Yeah.
So, are there any other major differences between a construction loan and a residential mortgage? I mean, a single family home that exists.
Yeah, absolutely. So with a construction loan, during that construction phase, when everything is being done, your payments are going to end up being just interest only. So you're not worrying about, principal and interest like you have on a conventional mortgage.
Mm-hmm.
Yeah.
That makes sense. And then in the end loan, are you aware of what your final payment is going to be when you start this process, or does it all come down to the end figuring it out?
Once we have those final figures, and everything is complete, that's when we are able to look at what the current interest rate would be for your end loan. So we don't determine what your rate is going to be at the start of the construction. It's based on once everything is said and done. So we will usually give an estimate saying, if this is where the rates are at that point in time, this is what your payment will be.
Okay. One thing I know people definitely building new construction do not think about or even potentially know about if they've never done it before is that the first year's property taxes tend to only be on the lot or the land. And so it looks really great when you get your tax bill and it's a couple $100 or, maybe $1,000 max if you're on a large parcel.
Mm-hmm.
But I don't think a lot of people think about the forethought. I mean, take time to have some forethought into what their next tax bill with the complete construction and the building on it is going to look like, and then they get some sticker shock. How do you help people manage future thinking and what is my payment going to look like? Plus, am I going to be able to afford the property taxes on this place once I get a full bill? Because we don't have a history of tax bills to look at, right?
Yep,
So
absolutely.
how does that work?
So what we do is when we're looking at qualifying and what your, estimated taxes are going to be, with your end loan, we'll take a look at what the appraised value is, and then we'll take a look at the current tax bill to see what the mill rate is that shows on that tax bill. So when we take the appraised value times the mill rate, that gives us our estimated annual property taxes, and that's what we use for qualifying. And it usually gives us a good general idea of what they will be, so that someone isn't, in that sticker shock when that first year you're just being assessed on the land or maybe a partial build versus, the following tax bill where you're going to be assessed and taxed on the full project that your house is complete.
Good to know.
Yeah, definitely a difference in those years.
I definitely think people get, and this is not necessarily a bad thing, and I don't want it to sound negative, but it's just one of those minor details that is not typically thought about when you are going through the beginning of the process. So I've seen many folks end up with a tax bill. They're like, if I would have known that.
Yeah. Yep, exactly. So always plan.
Right. Is there a timeline? Let's say somebody decides to go to the builder and they do have a plan ready to go. How much time do they need to be able to get that initial financing going?
Yeah, so if you know when you're going to plan on building, come see your lender at least 45 days beforehand. That's going to give us enough time to be able to review the contract and make sure we have all the correct paperwork, including, your pay stubs and W-2s and everything that we would, require for that, and be able to have enough time for the appraisal to be done and reviewed by underwriting, as well as getting that title work. So plan
Okay.
for a minimum of 45 days.
Okay. So should they be, I know you do a lot of things, most lenders are right now doing a lot of things virtually and through secure portals as far as applications go. Is that
Mhm.
typically what folks are doing for construction loan too?
Yeah, I would say that the majority are doing everything online and then uploading their documents. We still have people that come in and want to meet in person too, just feel more comfortable. So either way is fine.
Okay.
Yeah.
Any other tips or tricks that I haven't thought to ask?
Yeah, just have patience. Everything with how the market is right now is taking a little bit longer than normal. Previously appraisals could be done a lot quicker, but with the volume right now of still the refinances and how the purchase season is going and construction season, everything's just taking a little bit longer.
I know I just actually got this question yesterday, and it's something that I have received a few times over the last month, but are we seeing rates trending at all up, or are we anticipating for the remainder of the year that they should remain a little bit stable, kind of status quo?
Yeah, in the last couple months, they have started to trend up a little bit. What they're going to do for the rest of the year is still that kind of unknown,
Yeah.
anybody's guessing game.
Okay. That's good to know. And that's probably helpful for people in their budgeting too, I would imagine.
Yeah, absolutely.
Okay. So it sounds like when you're ready to build your home and you've decided this is for sure what I want to do, and you've either purchased a lot or you're about to purchase a lot, I guess that's a question too. Can you roll your lot purchase into your construction loan, or do you have to purchase your lot or land first?
Either way is fine.
Okay.
Yeah.
And so then once you have your land ready to go and you've got your contractor picked out, or your at least your floor plan picked out, and you have established how to have a general contractor, even if that's within your own family, and you've gone to the bank, you've filled out your application at least 45 days ahead of time so that your funds can be available when your builder's ready to go. We know timelines, especially in spring with weather, can be a little blurry.
Right. Yeah. You have to think about your weight limits on the road and when they can
Right.
actually start getting out there and building.
Right. Then we go ahead and the contractors start their end of the thing. They get, they get their first invoices from their subcontractors. They submit a request for money to the title company to be able to pay those subcontractors, and they can do
Mhm.
that a few times throughout the process. And then in the end, when it's almost ready to go, how long before you actually get to move in does the refi end of it happen for the final loan?
You're able to move in as soon as you get that occupancy permit. You don't need to wait for your end financing for it. So as soon as the inspectors come and give you the occupancy permit, the house is yours to move into.
Okay, and then when does that final loan have to be wrapped up after that?
Again, within that 12 months from the original appraisal, if we're going to use that appraisal. Otherwise, we start working on it as soon as you have your occupancy permit and we know our final dollars amounts that we're working with for your end loan, we're able to start that process.
Cool.
Yeah.
Well, that's really helpful information, I think, from my perspective, and I hope that everybody that's watching today has found this to be helpful too. How can people reach out to you if they have any questions after they've seen this?
Sure. My direct phone number at work is 715-847-4022. Otherwise, my email is amber.gober@bankpeoples.com. Otherwise, if you do go onto our website, which is www.bankpeoples.com, they can go directly to the mortgage tab and click on my information and apply now if they're ready to start that process.
Perfect. I really appreciate you taking time to sit down with me today. And
Absolutely.
a little behind the scenes, we actually did film this yesterday, I thought, but I never hit record. So
Take
thanks for
two.
doing this twice. I'm just really grateful for your time and your knowledge. You are definitely a gem in our area, and very much appreciate you. So thank you.
Thank you, Laura. I appreciate it as well.
Absolutely. So if you have been following along or haven't been following along, make sure you subscribe to my YouTube channel for future notifications, because there's plenty more videos coming on the building process, as well as liking, commenting, and sharing this if you felt this was helpful information, so that other people considering the build process are able to access the information as well. So thanks for joining in today. I hope to see you again soon. We'll definitely be keeping you in the loop as more videos are to come.